Well, almost lunchtime. But before lunch, we have a very exciting topic today on ETFs, from ETFs to DTFs. So a lot of the time, it sounds like crypto is this huge thing, and then you realize that the entire market cap of crypto is not even one NVIDIA. But when it comes to ETFs, the Bitcoin ETFs was by far the biggest launch of spot ETFs in history. So let's dive into it, look at the future of ETFs moving on-chain, what it means, what kind of structures can be built using blockchain rails. So before we get into it, we'll just do a round of introductions, starting with Griffin on my left.
Hi, everyone. My name is Griffin Peer. I'm the head of business development at Reserve. I've been with Reserve about 2.5 years now. Prior to that, I was an early hire at a crypto seed stage startup that focused on banking services for crypto indexes. We were actually spun out of Silicon Valley Bank, which was a great pitching point until it wasn't, and started my career in consulting and digital asset strategy.
Morning, everyone. So my name is Chung. I'm the CEO of CF Benchmarks. CF Benchmarks is a UK-based, what's known as a benchmark administrator, FCA regulated, because provision of indices for financial instruments is a regulated activity over in the UK and Europe. And we're the world's largest cryptocurrency index provider. We have about $150 billion in assets under reference. Probably our best known licensee product is IBIT, the aforementioned record-breaking Bitcoin ETF from BlackRock, CME crypto futures and options, also settled to our indices, as well as ETFs and ETPs listed in the US, Canada, Brazil, Hong Kong, Europe, UK, Australia, etc.
So we'll start with the big elephant in the room. So for people who are not familiar with what a DTF is?
Yeah, so let me give you some background. Reserve is a DeFi protocol that enables companies to launch indexes of crypto assets. We call them DTFs, which stands for Decentralized Token Folio. And you can really just think about it simply as an ETF, but fully on-chain. And that comes with all the benefits of being built on the blockchain. So there's 24/7 liquidity, there's transparency and verifiable proof of reserves, and then there's composability in larger DeFi ecosystems.
And so what does it bring? Is there some examples of DTFs you can cite?
Yeah, so with SWE and CF Benchmarks, recently we've partnered to launch an index that tracks CF Benchmarks large cap crypto index. And so what that means is the on-chain product is rebalanced quarterly in order to match the changes that occur within the methodology of CFB's index data that they provide. So very similar to like the S&P 500 ETF that rebalances to track S&P Global's methodology and data. And so what this allows is for an individual retail or institutional investor to hold a passive investment vehicle that rebalances and tracks the largest and most liquid crypto assets without the investor having to do anything.
And let's look at the tokenization aspect of it, right? Why now? What is the end goal with the tokenization? What kind of new possibilities does that bring to market?
Well, from my perspective, I think tokenization offers a bunch of key benefits. The first being you are not restricted to market hours for trading, and so there's 24/7 liquidity. There's permissionless minting and redeeming of the assets, so you don't have to rely on an authorized participant like you would for an ETF. And then tokenization also allows for composability and integrations within DeFi. So an example is we've created Morpho lending markets for this index. And so that means that users can use the index as collateral and borrow against it. Or they could borrow the index if they want to go short on the market. And so integrations like these allow users to actually put their investment to work to earn yield or to use as collateral, which is a big unlock that isn't previously available in the normal TradFi rails.
Yeah, and just to add to that, Griffin, that effectively with LCAP and the integrations that Griffin talked about, you're giving users, DeFi users, whether they are institutions or individual investors, the sort of utility that is today in the TradFi world restricted to the likes of Millennium and Brevin Howard, right? The big hedge funds. The big hedge fund can buy IBIT, can buy a number of, any ETF that's listed in the US, and then take that as collateral to its prime broker and unlock financing. With LCAP and its integrations, you're effectively putting that sort of utility into the hands of every investor. So you're really bringing that bar down. So giving investors that sort of option. There's really no reason why, other than the technology restrictions that banks operate under, why you wouldn't. Why should any of us not be able to avail ourselves of that type of service? Obviously, DeFi allows for that.
Yeah, do you want to double click on LCAP, how it works, what's in it, and what it took to launch it?
Yeah, so LCAP tracks the CF large cap index, diversified weight variant. So LCAP, the index invests in the top 95% of the liquid universe of the crypto asset class. So in a very similar way to MSCI World, right, invests in the top 95% of all liquid stocks. So LCAP invests in the top 95% of all liquid crypto tokens. The index is reconstituted every quarter, so that it's at the point of reconstitution, it is exactly 95% of the liquid market cap. And then, so those are the tokens, and then they're weighted in a manner using our diversified weighting structure, which means it's not standard market cap. Because obviously, I think everyone in this room is familiar with the fact that crypto has a very top-heavy market cap. If you were to cap weight the tokens, you would have Bitcoin and Ether would be 90%. Now, that obviously has limited utility for a crypto investor if you've got a portfolio where 90% of it is Bitcoin and Ether. So we apply a diversified weighting mechanism which nets out at Bitcoin and Ether being about 75% and then 25% of the weight being in the other tokens. So right now it holds 8 tokens in that diversified weight structure, and it will rebalance again on December the 1st, and rebalance again on March the 1st, and rebalance again on June the 1st, in exactly the same way as the S&P 500 rebalances on a quarterly basis. It's all 100% rules driven, so there's no index committee, there's no a panel of experts that decides what's in it. It is purely 100% rules-driven, using our methodologies that, as I mentioned, are the same methodologies we use for with licensees who have ETFs listed on the New York Stock Exchange, listed on NASDAQ, the likes of BlackRock, the likes of Franklin Templeton. And in fact, this specific index, there is an ETF filing by Crane Shares to list an ETF on BZX that will track this index. So, and that's a trend I think that we're going to be seeing. We have more and more interest from investors, both in the traditional space and in the DeFi space, for the same exposures, right? Stands to reason. Fundamentally, they're investors. They're always looking, by and large, it doesn't matter what ecosystem they're in, they're pretty much always looking for the same sorts of things. And so we're going to have a very interesting dynamic where you're going to have an off-chain ETF in traditional finance with a mirror analog in the on-chain world in the form of LCAP token. And so the liquidity complex that will, they're complementary. We view them as very complementary. They will enhance each other's liquidity, enhance opportunities for investors in the two separate ecosystems. And as we move, as regulations allow, we could you could see a world where they kind of merge, right? So you could tokenize the ETF. So you would have a tokenized ETF sitting alongside an on-chain, fully on-chain composed instrument in the form of the LCAP token. And so you're going to open up some very interesting liquidity pools and opportunities for investors through that mechanism.
And so you mentioned, right, obviously the composability with the whole DeFi ecosystem, allow people to borrow, use as collateral, kind of stake, get some kind of yield on top of these things. But if we get out of, and you started hinting at tokenized ETFs, so now what does it mean if you get outside of the crypto world, right, getting more traditional things onto crypto rails? What can it open in terms of cross-asset products?
Yeah, that's a great question, and really that's how we see the future panning out. As more assets become tokenized, CF Benchmarks is going to be seeking to package up exposures, be they beta exposures, strategy exposures, using those assets that are on-chain. So you have that composability piece that Griffin mentioned, and flowing in the DeFi ecosystem. We certainly see that as the logical next step. So large cap tokenized equity DTF is perfectly possible. You're looking at, as I said, more strategy exposures. So derivatives positions in derivatives that follow a strategy, that follow an index strategy, let's say covered call or basis capture, you could tokenize that, right? In time, I think that these are the sorts of things we're going to see. These are the sorts of things that CF Benchmarks is working on. Pretty much everything you see in the ETF world, everything that's packaged up as an ETF, there's no real reason why eventually you can't package up exactly the same thing, bring it on chain, and give investors all of that utility.
Yeah, I think as everything becomes tokenized, we look at it at Reserve like money Legos. It gives us more tools to allow people to create interesting baskets of assets and interesting portfolios. And I think as more asset classes are tokenized and brought on chain with 24/7 liquidity, that allows for more diversified bundles across, you could have an index that's tokenized equities, tokenized commodities, fixed income, crypto assets, et cetera. And because it's fully on chain, it can work, where in traditional finance rails, operationally, there'd be a lot of challenges to package that up into one product because of the settlement and the different liquidity of these different asset classes. And so tokenization allows for that kind of streamlined and bringing everything together.
Yeah, I mean, speaking of rails, right? You mentioned, right, if you have your fixed income bucket, there are like profound fundamental reasons why it's actually really hard to apply to a different bucket of assets. From the infrastructure layer perspective, how is Reserve approaching this part?
Yeah, I think one of the ways we're approaching it is kind of, we want to build the rails for people to experiment and create interesting products on. We're not pretending that we know what the best composition of an index is or anything like that. And so we just want to create this platform and then try to work with experts like CF Benchmarks and other types of asset issuers that we can provide them the tools to help bring these products to life and allow them to be investable.
Mm-hmm.
Yeah, and certainly from CF Benchmark's perspective, the infrastructure that Reserve operates is pretty much ideal, right, for our purposes as index providers. So LCAP token, we saw demand from the DeFi investor base into a diversified index tracker, basically, on-chain. That was launched just about a month ago. It's seen about $6 million of inflows. Now, it doesn't sound a huge number, but if you put that into perspective, if you compare it to the ETF world, so in 2025 in the US, there were 850 ETF launches. $6 million of inflow in a month, if you annualize that, that would put, if LCAP were an ETF, that would put it in the top half of all ETF launches. So whilst it doesn't sound a lot, it's actually a pretty meaningful. It's had a pretty meaningful impact. It's had a pretty meaningful reception from investors, and then as Griffin mentioned, the more utility that comes to the token through things like morpho pools, et cetera, and some of the other things we're working with partners on, then obviously, it's very likely you'll see more inflow. And so that's an interesting aspect of what we've done, is we're kind of exploring the playbook, if you like, of how on-chain asset gathering will develop. We're one of the first to do this. And then, as I said, when the parallel ETF in the traditional financial world comes about, which hopefully will probably before the end of the year, once the US has a government again, we're going to see the two vehicles operate in parallel, right? And it's going to be fascinating to see how that plays out. And hopefully we're establishing a bit of a pathway, a bit of a playbook for others who will seek to do this on chain in the future as well.
And just to add one more piece on the demand side, at Reserve we've done a lot of market research to try to gauge demand for these broad market indexes, and so we conducted a survey with Sentiment to poll over 1,000 U.S. retail crypto holders, and a lot of them, the vast majority of them, already hold ETFs in traditional finance. So I think it was 68% of crypto holders were holding ETFs already, and 85% were interested in a broad-based crypto index on chain that similar to a DTF structure. And so there's clear demand for this modern portfolio theory, broad market, passive investment vehicle. And with the ETF standard issuance guidelines coming out, I think we'll see a lot of that. And then I think bringing that on chain and unlocking some of the integrations with DeFi and other benefits is just the natural evolution from there.
Yeah, and speaking of that, I think a big part of building the financial chops and infrastructure to build those products is making them cheap, right? And when you take a step back in crypto, we started with funds that were giving exposure to Bitcoin with a 220 model, right? So what does it mean in terms of fee structure, right? How are you thinking about fee structure for LCAP and for future products?
Yeah, so any DTF that's launched on Reserve can set the fees as they wish, but there's two types of fees. There's what we call a TVL fee, which is similar to an expense ratio on an ETF, and then there's a mint fee, which is a one-time fee at issuance. Now, users don't have to access it through issuance. They can trade for it, whether on a centralized exchange or a decentralized exchange. And so what we've seen with the mint fee actually is that is almost like a tax on arbitrage, because there's an arbitrage opportunity from the NAV of the index versus the index price itself in liquidity pools. And so we've seen arbitrageurs and MEV searchers are constantly trying to capture value when there's a discrepancy there, and which drives a lot of volume of minting and redemption, and then also drives a lot of revenue via that mint.
How does it change the dynamics compared to the TradFi equivalent where you have authorized participants?
Yeah, well, so you mentioned authorized participants. Right now with ETFs, only authorized participants can actually create or redeem shares of the ETF. And so when you open that up and anyone can mint or redeem, one, it creates more liquidity because you now have the primary liquidity of the underlying assets as well as the liquidity of the index itself. And two, it creates that arbitrage opportunity I was mentioning and allows for potentially tighter tracking, and then also of the NAV, and also the creation of this mint fee as a revenue line, which has the potential to make these products a lot more profitable for the issuers.
Yeah, and obviously in the ETF world, it's all about scale, right? And in fact, asset management, running money is fundamentally all about scale. So as these products scale up, then yeah, we will seek to reduce the fees so that it drives ever more inflow, ever more access, et cetera, et cetera. So what I think we'll see in general, actually, to your point, Sacha, is as more assets come on chain and there are more vehicles that are created, DTFs and similar, are created to hold those assets, so that will drive down, and as they scale up, that will drive down the fees that they charge. Because I think that it's going to take some time, right, before you're going to see on-chain vehicles reach the sort of scale that ETFs have. ETFs have been going for 25 years in this country, so I don't think it's going to take 25 years, but it will take some time before you start to see products with some serious scale and hence the very lowest fees to match that.
Yeah, I mean, academia has been actually a big driver behind the growth of ETFs with all the modern portfolio theories and getting broad-based exposure to diversified exposure to the market, right? So let's look ahead, right? What's the roadmap? What's the future so starting with, blockchain-based crypto baskets. Then what happens? What type of innovation are you looking to see in the next year or so with exchanges or?
Yeah, so I think you've got the crypto asset class. We are that's our bread and butter, if you like, and we've done LCAP. There may be one or two more that offer different types of exposures. So I mentioned sort of strategies like covered call and basis capture. So yeah, that's very possible. And then after that, I think we'd be looking at tokenized equities, right? So you already have an increasingly liquid market, particularly X stocks. The X Stocks Alliance, so Backed and Kraken and a few others who are involved in that, they've tokenized US equities, currently only available to non-US users. So it's not available to US investors, but non-US, it's available to them. I think the latest stats I saw on X Stocks was they've got about 48,000 different individual holders. There's been about $8-9 billion traded in those stocks. So they're increasingly liquid. And obviously they are tokenized, they're on chain. So yeah, the next logical step for CF Benchmarks is to build index exposures on those X stocks, right? So probably launch them on reserve. Be that a Fangma or a whatever, right? Well, whatever exposures that the investor base is looking for, CFB can build that as long as we have, in Griffin's words, the Lego bricks of tokenized assets. So, very, very likely we'll be doing something on that. And then, as assets come on chain and as those assets become liquid, because that's a key part you've got to remember, right? That if you're going to package these individual assets up into an exposure, you've got to make sure it's liquid, right? Because what you don't want is investors having a bad experience, right? They acquire a DTF into a bunch of underlying exposures that are illiquid, and then when they come to redeem, they see a spread as wide as a bus, right? That's not the sort of UX that you're trying to deliver. You're trying to deliver something that is akin to the ETF market. So now, as I said, we don't have quite the same scale yet, but you still want to be delivering, an experience that's in that ballpark.
And I think for us to add on to what Sui was saying with, tokenization and different asset classes, I think we'll start to see kind of a blend of different indexes and what's in the backing. An easy kind of product to imagine is Bitcoin, tokenized gold, tokenized S&P 500, all blended together, or even an AI basket where you have the top AI tokenized equities and then the top AI crypto tokens, and just continuing to blend the wall between TradFi and DeFi in terms of exposure. And then additional roadmap, like what we're looking forward to at Reserve, is trying to build out additional integrations with these DTFs. So I mentioned Morpho lending market. We're hopefully in the next month launching perps for LCAP on Kraken, as well as looking ahead towards other integrations in DeFi and continuing to kind of build out the access of use cases and utility for these products.
Wonderful. And we're close to wrapping up, but just to summarize, right, like bringing all those on-chain baskets and down the line, being able to bring all the liquidity stack that we have built with crypto and DeFi and bring that to also traditional markets and potentially even break silos within different buckets in traditional markets, which the biggest challenge has been how do you regulate the thing, because it blurs the line between a lot of different things. So how can you leverage that to build better financial products for asset management? Any final thoughts or any remarks you want people to leave with today?
I guess I'd just say, we're excited to continue trying to create interesting products that we think have demand for customers and build out these use cases. Something we're very bullish on at Reserve is what we like to call the DeFi mullet, which is traditional finance UX in the front and then DeFi rails in the back. And so what that might look like is on your Kraken app, you can buy the LCAP token and then borrow against it and use it as collateral. And it's your normal user experience on the front of the app, but then under the hood, you're using decentralized lending markets, and your actual LCAP is put up as collateral on chain. But that entire experience is abstracted away from the user. So I think we'll continue to see further development on that front, and it's something we're excited about.
Yeah, and I think for CF benchmarks, as I mentioned, more exposures that there's demand for, and yeah, as I meant, as an index provider, we work very closely with lots of asset managers in the traditional financial world. Right now the DTFs are index-based, so they're passive. There's no real reason why they can't be active, right? There's no real reason why you can't have an active manager issuing a DTF. We at CF Benchmarks, increasingly are working with active managers because we provide them with risk premium factor data, right? In the traditional investing world, particularly in equities, you view asset managers and investors view the equity market as a place with risk premium, right? Growth, value, momentum. We view the crypto asset class in exactly the same way. We engage with a lot of active managers around that data. We provide that data so helps them understand what's in their portfolio, how the returns are being driven, and so there's no real reason why you can't apply that into an active strategy and have it tokenized.
Yeah, actually, just final point on that front. We've seen people create active DTFs. So one example is actually just yesterday, a hedge fund out of Europe launched a DTF really as a way to tokenize their portfolio and offer the product to a wider array of investors rather than just their institutional accredited investors. And so, there's these different strategies of how you can use reserves infrastructure and tailor it to your needs. And it's cool to see people finding new use cases and pushing the barrier there.
Mm-hmm. Yeah, and pushing the boundaries of capital formation too for those instruments. Wonderful. Well, thank you both so much. Congrats on the LCAP, and we'll move on to lunch finally. Stay tuned. At 1 p.m. we're resuming with a talk you won't want to miss with Monad and Coinbase in this same room at 1 p.m. And in the meantime, enjoy lunch.
Thank you.